Palantir. If you missed it, you swear that it's overvalued. If you own it, you see it riding up and down, you get so worried that you come crashing down again. Now I understand what you think, and today I'll be sharing with you because Palantir has actually 16x itself over the last 5 years. In fact, if you see over the last 1 year, it's done almost a 4x. Recently, there was some price correction, correct? Because there was a short seller saying that Palantir is only worth $40. Its justification, when you compare it to OpenAI, also at 500 billion market cap, you would realize that Palantir's total addressable market is much smaller according to it. Business mode not as strong as OpenAI, etc. etc. So naturally, market sold down. That's why we have this video today. I'll be sharing with you in 3 key points. The first, why I think Palantir's share price is crazy, but I'm not leaving. The second, something a bit more controversial. Why I think Palantir is actually less risky than NVDA. And last but not least, the third, what I've actually done. So if you're curious, continue watching. Hi guys, welcome back. Let's start with some valuation matrix for Palantir and why many who are in the valuation space are unable to grasp what's the right value of it. There are so many smart heads saying that no, I love Palantir as a business, but this valuation I cannot support. And actually I can understand why, because if you see in terms of price earnings ratio, Palantir is 500 times. 500. Which means if you invest, you need 500 years to make back your capital. That's what it means with a price earnings ratio of 500 times. But price earnings ratio is not seen like that. We need to look ahead, what is in front in terms of earnings wise. Because if earning jumps, that's the denominator, you realize that price earnings ratio would collapse. So let's see in terms of Palantir's forward price earnings ratio. Wow, it's lower, but still obscene. 245 times forward price earnings. That's really factoring Palantir's massive profit forecasted in the years ahead. And 245 times forward is really crazy in any matrix. You know, I'm not silly. I'm not here to justify why Palantir is cheap. That argument cannot win one. But I want to show you what happened during the dot-com crash. There was a company also, a shining light in that period. Somebody who's a household name now, but couldn't even produce any profits back then. That company captured the imagination of the e-commerce space, and is now then Amazon. In the period from 1998 to 2002, Amazon had little or no profits to show. It was reinvesting everything, and therefore its forward price earnings was always in the 200 to 300 range. Again, this is just an estimate because nobody really knew when Amazon would start turning profits and how fast it could scale that. So can a stock sustain on a forward 200 to 300 times forward PE? Quite clearly the answer is yes, and it happens unfortunately only in bubbles. So next question, is current AI going to be in a bubble? Again, it's very hard to justify it's no, so I rather explain where we are if we are really in a bubble. Leading name NVDA has reached all-time highs. Palantir itself has also cracked all-time highs. And for a bubble to burst, the first criteria means it can't even cross its previous all-time high. And therefore I've drawn 2 arrows as to where we can be. If we are optimistic, we are somewhere further down, in the thicker green line over there. And if we are pessimistic, maybe we are in that thin line right near the top. Whichever the case is, personally for myself, I actually think it's not that scary. It's very unlikely we are in the later stage of the bubble. Again, that's my personal opinion, not investment advice. I'm just sharing you my own train of thought and why I've held on to Palantir. The biggest fear is if you are in the right hand side, correct? This red zone over here. What happened in the dot-com crash? Buying in this red zone is where we get very hurt. But take note again, we are very unlikely in this zone because interest rates are dropping. It is very unlike the dot-com crash where interest rates were forced upwards. Fundamentally, that is a world of difference. Because back in the dot-com bubble, if you're an unprofitable tech company trying to raise money for future growth, with interest rates going up, you are unable to raise money, and take note again, if you're unprofitable, it means you could go bankrupt. Currently, the top AI names are all profitable, and a lowering of interest rates will only make its forward growth look even more appealing. This part of the argument, I think, is easy to win. That's why I highlight it's very unlikely we are in this red zone. Which means also, all the fears that, oh, you buy now and the bubble pops and drops 90%, that part is a bit extreme. That's my personal view, and the next part is yet another personal view, and it is why, even at current price earnings valuations, I view Palantir less risky than NVDA. Let's look firstly at NVDA. Current price earnings ratio is about 50 times. And if you see over here, it looks actually quite reasonable, correct? On a 1-year average. Pay 50 times for a company versus pay 500 times for a company. You don't even a mathematician, you should always take the pay 50 times, correct? I understand it. But again, price earnings ratio doesn't tell a full story. If we see in terms of NVIDIA, it exploded earnings growth, especially in 2023. That was when it recorded quarter-on-quarter triple-digit gains and year-on-year triple-digit gains. Profit grew, revenue also grew. If we see over here, this is the revenue comparison quarter-on-quarter and year-on-year. Everything is growing, not that NVIDIA is shrinking, not true. But what do we see? The growth rate seems to have peaked, correct? In 2024, year-on-year change is 265%, and that has gradually shrunk downwards. And if someone develops its own chips, or there is further trade wars moving ahead, this growth rate can't go back to its good old days, and it will more than likely need to compress further. The reason is quite simple. NVIDIA's dominance is already proven. When you're at the top, people are poking at you. Any point you fall is going to be a massive fall downwards. And even if profits are growing but at a much slower and slower pace, the share price itself will be hard to justify. And what if there's a further worst case? What if there's a major slowdown in AI, whereby there's a digestion period in terms of the AI chips purchased from NVIDIA? If profits start to shrink, price earnings ratio will shoot up. And that's actually what happened back in 2023. That was just a low cycle, but it goes to show again, price earnings ratio doesn't tell a full picture. If earnings shrink, for a dominant company to see some shrinking in profits, price earnings ratio will shoot back up. And we haven't even talked about the super worst case, which is what was experienced by Cisco. Cisco was the market darling back in the dot-com day because it was the one selling the shovels for the entire internet boom. When everything slowed down, orders were cancelled. And Cisco actually recorded a loss year in 2001. That was due to inventory write-off. And this kind of extremes could happen to the AI space, which is why vis-a-vis, if AI slows down, in my opinion, everything will get sold down. It doesn't mean that hiding in NVIDIA with a smaller PE ratio, you're safe. I think even Microsoft would sell down massively, which means to make money in any of the tech firms, the AI boom or the AI bubble will have to continue. So that brings the point. If AI boom still has legs to grow, then what we see in Palantir's growth looks a lot more reassuring. Profits have been growing massively. Latest quarter was a 143% year-on-year jump. And this profit growth has been really consistent. There was a quarter in December 2024 where profits seem to have dropped. And that's because of an adjustment for employee stocks. But other than that, profits have been growing. The second portion is actually on revenue growth. And this is the interesting part. Headlines have captured that Palantir has cracked its first $1 billion revenue quarter. But the interesting part to me is that right now, year-on-year growth is actually accelerating. You heard it right. Accelerating growth, which means it's not slowing down, it could be accelerating. Very interesting, correct? And when I go around asking private clients also, hey, has your company adopted any software that's AI related? I always hear Copilot, but I very seldom hear Palantir. The adoption of Palantir software in Fortune 500 companies seem very low in my opinion, which means the total addressable market seems bigger than expected, contrary to what that short seller has mentioned. And if we see in terms of commercial growth and government growth, you would realize they are firing on all cylinders. There is use case even for commercial right now, even though Palantir started off as a government-first software company. And speaking about government base and being in the defense space, it was interesting to note also, some of the top defense ETFs have Palantir as their top holding. This over here is SHLD, Global X Defense Tech ETF. You can go and check it out. Over here, this VanEck Defense ETF with the ticker DFNS. Palantir is also on the top. And very surprisingly, if you look back 3-4 years ago, defense companies are usually contractors that manufacture rockets, manufacture tanks, manufacture arms. The future of defense is in software and intelligence really. Palantir being the number one in that ETF reflects the future of how defense works. And the interesting about defense is this. If there's indeed war in Taiwan, what will happen? The semicon industry will be in big trouble, correct? But defense, you bet the spending will just multiply because there's war. Palantir is well positioned and the government defense contract is actually a very interesting business to hold long term. Coming to here, if you agree with some parts that I mentioned, smash the like button. It's taken our team hours to prepare this for you. Don't go buying Palantir or selling Palantir because of what you heard. Always do your due diligence. Thank you very much. And since you stayed with me right to the very end, let me share with you what I've exactly executed. This chart over here shows two things. I didn't sell on Palantir in this run up further. In fact, when the short seller came out with the report and Palantir sold down, I bought. You heard it right, I bought. I didn't buy when the earnings report came out and Palantir shot up to $190. That wasn't the best time to buy. In my opinion again, is when the short seller report came out and there was panic. Palantir sold out 10% in a day and I scooped up some. I continued to buy, and as you can see, these are my action steps. Maybe the time you're viewing this, Palantir has dropped down to $100. Then too bad for me. I don't have a crystal ball also, but for myself, I think I know a game plan. And hopefully I've described some to you and you found it useful and interesting. Thank you very much for listening in. And as always, check out some of my previous videos on my current investments. See if either of these can help you in your journey, and invest prudently as always. I'll see you there. Take care and goodbye.